Ah, man. Let me put this here. What's up, bro? Just pinning up my website. Hold on, really markups and what's up, man? Hold on. Here's some Kelly.com. Let me pin this real quick. Yeah, facts. Definitely did get a fresh cut. Needed that. What's up, fam? What's up, y'all? Could y'all hear me good? All right. I'm about to go straight into this live. Ain't gonna be too long. Hold on. Pause. Make sure everything is set. All right. So as I said, there's not gonna be like a crazy long live. The reason why is I got a live. I got a group call at 8:30, and I also got to prepare for that. So I know I always say that I'm not going to be long with these live, but I'm really not going to be long with these lives. Now I told you guys the other day, for those of you who were on my previous live when I was talking about what was I mentioning the other day? I think I was talking about the dollar breaks, all that stuff, us losing reserve status and everything. Yeah, I was speaking about that, but I also said I was going to mention about stagflation, why I do feel as if we are going towards that. So I'm going to break that down. Before I get into that, quick disclaimer: anything and everything that is said here is for entertainment purposes only. Do not act on any of the things. Do not act on any of these things that said here today without doing your own research or speaking to your financial advisor. I am not your financial advisor, so again, do your own research, speak to your financial advisor before making any type of investments. All right, now that's out the way. So I want to say this one thing, right? And it's been like really bothering me because, like, I mean, for starters, we obviously see what's going on with Trump when it comes to he's getting locked up and everything, and he's going down. Not really gonna get into that aspect of it, but the reason why I'm saying this is because I see a lot of people, like, they're sharing videos and they're sharing stuff that, like, Trump saying that we're losing the reserve status, or people in general saying we're losing reserve status, but they really don't know what they're talking about, and it's really irritating me because, like, I'm like literally this close to being so fed up with social media. I'm not even joking. Like, once I figure out how to do ads, I'll probably post once in the blue. I'm not even joking. It's literally just right there. But besides that, though, yeah, a lot of people, they just don't know what they're talking about. Like, they're posting things for clout, and it's like this either has nothing to do with your brand, or you're just mimicking what someone else said. But the person who said it, they don't know what they're talking about. So it's really the blind leading the blind, and it's irritating. That's what's up, girl. It's just irritating because it's like, yo, we're living in a society that we're so stuck on clout. We're so tapped on what can I do to get my quick 15 seconds of fame, that it's like, oh, this person just shared this video or they just said this in the caption. Let me copy and paste everything that they saying so I can go and get my own 15 seconds of fame. And it's like, fam, that's not how it works. It doesn't work that way. And you just look like an idiot. So it's like, we're just seeing a lot of people who look like idiots. But then again, you got other people, again, that's the blind leading the blind, because you got other people who don't know what they're talking about, right? So it's like, if you sound like you know what you talk about, people are going to listen and believe whatever you say. I can say something like, yo, the sky right now is straight dark green. Like, it's been like that for 5 days. It's dark green. You don't believe me? Go look. Like, don't you see that? It's dark green. And I'm saying with so much conviction, they're like, yo, he's right. It actually is dark green. And, like, damn well it's not dark green. So that's what's really going on. And obviously that was an example. But I'm using that because that's what just a lot of people be doing. Now, back to this thing with stagflation. So I actually have notes. So what I'm going to start doing, I've been seeing a lot of people, they're like writing notes and they read off of it in these videos. I'm over here memorizing everything that's going on. I'm making it harder for myself. So I'm like, yo, let me just go and write down some notes. So I do have some quick notes here that I'm going to go over on stagflation, the recession, everything and so forth. So I'll do a quick summary. Hey, Hanson, you're absolutely right. Thanks, Des. Des, I got to get you on here, girl. It's been like 10 years since I actually saw you, man. Like, what the hell? But, what was I getting ready to say? Oh, yeah. All right. Oh, yeah, that's what I was saying. Even with, like, the dollar and stuff as well, like, again, as I said, like, we are on track to lose the reserve currency. I don't think it's going to happen anytime soon. I actually, my projection since 2020, my projection has been the third quarter of 2025. That kind of sped up until the fourth quarter of 2024, and now I'm just iffy if it's going to be the fourth quarter of 2024 or it's going to be the third quarter of 2025. I'm stuck in one of those two. I don't think that's going to happen right away, like people are making it seem as if it is. One huge reason why is because at the end of the day, you still got like 62% of countries or just of the world, they still use the dollar as the world reserve. So, like, yeah, I understand what China and Russia are doing, and they're speeding up their process. I just don't think it's going to happen as quickly as people say it is. Well, I could be wrong, but I just don't think so. So now going back to stagflation. So for starters, stagflation, you have recession, you have inflation, and then you have stagflation. Stagflation is pretty much like the worst of the two. I feel as if we are going towards stagflation. I have not seen no one in the media talk about this, which is kind of odd because this is legit we're going into, especially with everything going on with the Fed rates, the banking issues, and so forth. So, anywho, my wife actually laughs at this word stagflation. I don't know why she thinks it's funny, but she does. But let me go back to what I was saying. So, stagflation, what that pretty much means is you have high inflation plus high unemployment. And then also have a slowdown of the economic growth. That's pretty much what stagflation is. So obviously you guys know, like during a recession, that's different. Like we have, that hurts the economy. We have unemployment rising, and then inflation isn't really that high. And then however, during inflation, we have the opposite. We have prices are rising, unemployment is falling, economic growth is expanding. The reason why economic growth is expanding during inflation, because your assets increase in value, right? So it's like if I was to have $1,000 and I go shopping at Amazon and I send my $1,000 towards Amazon, right? That raises Amazon value. Why? Because it's supply and demand, right? Amazon is a publicly traded company. The more money I give them, the more their value, their business makes money, which their value increase within their stock and so forth. And that happens across the board. So that's pretty much like a quick example, a quick breakdown of speaking about inflation, how that works. You guys already know what a recession is. I don't give a damn what they say. A recession is still 2 quarters of back-to-back decline in the economy. You can change the definition all you want. That's just the truth. But yeah, so back to stagflation. So the reason why I feel as if we are headed towards that is because, again, like it's high unemployment plus high inflation as well as slowdown economic growth. Right now, we are starting to get that. So the Fed alone, which is the Federal Reserve, that's our central bank. So like pretty much every one of the major countries, they have their own central bank. Ours is the Federal Reserve. It's not actually federal, which is really funny. And it's not actually a bank. So it's called Federal Reserve, but it's not federal, nor is it a bank. That's where all the printing money come from. They come from the Fed. You know, they print money and so forth. But I'm not going to tap in with that as well. Let me just continue going on what I was saying. So the Fed is already saying that to help out with the slowing down in inflation and to cut back on them raising rates, what they're going to be doing, they're looking for unemployment to be between 4% and 4.9%, right? They just said the 4% range. They didn't say it's going to be 4.3, 4.1. They said literally 4% between 4.9%. So the thing about it is this, and this is something that I also make a video about this. Elizabeth Warren, during Jerome Powell, which is the Fed chairman, during Jerome Powell's testimony, Elizabeth Warren asked him the same thing. Like, you're saying that unemployment is going to go up to 4% or higher, which pretty much means that we are going to have a minimum of 2 million jobs lost. And he's like, yeah, that's exactly what it is, which is true, right? So going back to what I was saying, sorry, I just had a message. I thought it was not disturbed. But going back to what I was saying, we are expected for 2 million jobs lost, right? So what that means that unemployment is going to rise, right? It's 2 million. So I don't have to like break that down and let you guys understand why 2 million means high unemployment. On top of that, we also have inflation. So inflation is starting to pick back up. We're hearing that inflation is slowing down, but that's not necessarily true, right? So even when it comes out to us bailing out these banks, and they're saying it's not a bank bailout, but it pretty much is a bank bailout. If we bail out the depositors as well as employees who worked at these banks, and you say that you're going to give them an advance check before they go find another job, that's a bailout. Like, if I lose my job and you tell me that you're going to give me $200K until I get the next job, what is that? That's a bailout. So you can say whatever you want. At the end of the day, that's what a bailout is. So back to what I was saying. So again, you have all these bank bailouts and so forth. Right now, how do we get that money? We have to print that money. So the country makes money from inflation, from taxation, right? So it's like, that's another, we have taxation and also you have inflation, right? So taxation is, Sorry about that. Taxation is how they make money, but however, the government, they're spending like 3 times more than they're making. So the example is this. Let's say that they're making like $1,000 a month through taxes. They're spending $3,000 plus a month through taxes, right? So obviously you guys already know if you're spending more money than you have coming in, you're just going to go broke. But at the end of the day, you got this printing money, right? So you're printing more money, you got the printing press, and you can continue doing that, move forward. I believe it's going on the second week in a row in which the Fed's balance sheet has started to increase. So what that means is that it shows that they're printing more money than they have coming in, but not just coming in, but just to go to make things more difficult. Which again, when you print more money, that raises inflation, right? Like, and when it comes down to what happened in 2020, we already know that. Like 2020 happened, the Fed responded by printing shitloads of money. Well, I believe it was like 46 of all U.S. dollars was printed in 1 year alone, right? Now you can go back to 1776. Really 1774, but I'm not getting into that. But 1776, I'll say that, until currently, all U.S. dollars printed in 1 year. So that just shows like how much money was printed. So because of that, that just raised inflation. That's the reason why eggs is like $11 right now. Gas is starting to go back up as well because of the things with Saudi Arabia, OPEC, but I'm not going to get into that in this video. Hold up. All right. What was I saying? All right, yeah. So back to that. So with that being said, yeah, that's going to raise inflation, right? So back to stagflation. Remember, stagflation, what that means is you have an increase, you have high employment as well as high inflation, and that's going to be a slow economic growth. That's what we're headed towards. I just mentioned that with the Fed. I mentioned that with how inflation is rising, right? So like, there's just inevitable that we are going that route. And it is weird because a lot of people aren't talking about that, but that's not a good thing. Like, we want to absolutely avoid stagflation. So the last time we was in stagflation was 1981. I think I wrote it down. Oh, 82. I did write it down. I have notes. Oh, perfect. So I can look at my screen now. I don't gotta keep memorizing it. All right. So I wrote down during the last stagflation we had 1 in 74 and 75, as well as 78 and 82. So the 1 in 74 and 75, that was from the oil embargo. And then during that time as well, the S&P fell 40%, right? So we are also on track for the market to have another declining quarter. People are thinking that, like, no, we're not. You know, at the end of the day, stocks are going to rebound, which is true, right? But it doesn't rebound right away, right? This is the reason why investors, they're also so heavy on getting rid of jobs, as well as they're just cutting over their overhead, because majority of investors, they just lost money in 2022, right? The market, it did not make, it wasn't positive last year. So pretty much, 2020, 2021, we were booming. 2022, it was not that great. Majority of investors, as I just said, they lost money. So again, back to what I was saying with the market's starting to decline. Like, yes, the quarter, like with the NASDAQ, it did have a positive growth because that was based off of the tech sector, right? Well, the tech stocks. So the thing about that is, now, because a lot of people are saying, how come like Facebook is up, or Google, Amazon, and so forth if they land off jobs? Here's the reason. So the economy and the stock market, people think that they're parallel, but it's not. It should be parallel by definition, but it's not, right? So the economy is based off of you have a job. The stock market is based off of how a publicly traded company is doing. Right, so I think that things are going, the division of it, or the separation, is going to continue to spread. The reason why I think so is because, for starters, majority of people, they are stuck on going broke for social media. And when you go broke for social media, what are you doing? You're spending your money on goods and services. Those goods has to deal with a Louis bag, a Gucci bag, or you want to take these vacations, which means that you have to, well, let me go back. Gucci bag, Louis bag, all that stuff, right? LVMH, they own those things, Moet, all that stuff as well. You want to go take these vacations, you take flights, which is like Delta. Some people do like Spirit, or like Frontier, JetBlue, all that stuff. Again, publicly traded companies. You're buying things on Amazon, publicly traded company. You're going to Target, Walmart, Starbucks, all these things, right? So we're putting money towards that, which again is going to increase the value of that company, which is going to make that company more valuable. But however, because a person doesn't have a job doesn't mean that the economy is going, that the stock market is going to do bad. So it's just not the same thing. So now back to what I was saying about stagflation and what's going on with it. Yeah, so last time we had it, it was a decrease of 40% of the S&P. And the last time, I think I wrote it down. Yeah, the last time was 78 through 82. That was the last time we had stagflation. Now, again, a lot of people, 65% of economists are already predicting that we're going to have a recession this year. And I personally think that we're in a recession, but we're trying not to really be in a recession, right? So it's like, it's really good debate if we technically are, technically aren't, but it really depends on the data you're looking at, because the data that we're using to say what a recession isn't is continuously changing, right? It's like CPI. The way they factor in CPI, that's our inflation indicator, it's changing as well, right? So it's like they're trying to do things with like core CPI, which means that like, it's CPI excluding shelter, food, and energy. It's like, at the end of the day, that's the main things that create CPI. So if you exclude the main things that make CPI, it's no longer CPI, right? That's like saying, let me not get too political with that. Let me use a different answer. That's like saying, what can I use? That's like saying, I gotta use this. That's like saying like a boy, right? So it's like, we say like, a boy is, at the end of the day, boys with male parts, right? So it's like you're born with male parts. So now if you're not born with male parts, then it's like you're pretty much saying that you're no longer a boy. It's like, well, that's what they're saying. They're like, well, you can strip off the what makes a guy, but we're still going to say it's a guy. It's like, how is that a guy, right? It's just not. At the end of the day, you can be political, you can, feel away, but that's just the truth. But back to what I was saying about stagflation. So it's like another thing that's showing us as well is the fact that silver is starting to outperform gold, right? That's not a real good thing. A lot of times those things happen when, again, we have stagflation. The last time that happened as well was during stagflation. So that right there is also showing us that we have, that's not just it's pushing towards stagflation, but it's showing us that, you want to start going more into like these physical assets which make the most sense and get away from these like fake assets. So especially right now, the way the dollar is going, I do think that a lot of you guys should focus more on other type of assets. As I said, like gold, you can do gold stocks, cryptos as well. Just things that's going to be a hedge against the dollar, right? Because as the dollar continues to lose value, these other assets are going to increase in value, right? It's the hedge against the dollar. That's another reason why it's called safe havens. So for another thing as well, that like you can also invest into yourself by removing your debt. So a lot of people, they don't look as if that's an investment, but it is, right? Now, if I have like $100, well, I'll do it. If I have $1,000 in my investment portfolio, but I have $1,000 worth of debt, I'm still at zero net worth, right? So it's like, we don't look at it that way, but it's like you should focus on removing your actual debt. And then once you're at a stable place, then go towards investing to the markets and so forth. Because again, you don't want to have, your debts, the interest rates on your debts, they actually go higher than it comes to your actual value of your net worth and what it's worth. And then back to what I was saying when it comes to stagflation. So again, when I was talking about the Fed and then raising rates, right, that right there is turning into a big turmoil, right? So the reason why, because we're now turning into a high interest rate environment, and that's not good. Because at the end of the day, a bank is still a business. They have to make money. So if they're losing money by all these bank runs that's going on, right, and they have to go and make sure that that this individuals had the capital and so forth, whether the investment they put into it, they have to sell their assets to make sure to make sure that the customer is taken care of, right? What I have to do, I have to start raising my rates. All right, so yeah, I can give you another credit card. I can give you another loan. However, if the normal credit card loan APR right now is like 19%, right? What I'm going to do is, okay, no problem. Instead of it being 19%, it's now going to be let's say like 30 or 40%, right? Well, that's an exaggeration, but it's just going to be higher when it comes to that. So again, as I said, it's going to just become harder for these loans to come into place. I also don't think that you guys should like prioritize loans right now. I think you guys should prioritize like an actual plan, right? Because like, yeah, you can get this money and so forth, but at the end of the day, if you don't have a plan to do with this, it's like, what's the point, right? There's no point of having things just to like, you have no plan for it. Because at the end of the day, it's a loan, right? You have to pay it back. Loans aren't something that's guaranteed. And it's like, it's it's just going to be there forever. Like you got to eventually pay it back. It could be a 0%, 18-month, 24-month, and so forth. Like if it's a grant, that's different, right? Grants is not loans. But I just recommend you guys go with the grant route, right? The loan route. And if you're going to go alone, just make sure you have a plan set for it. Because what you don't want to do is, as we continuously lose the value of the dollar and goods and services increase, right? Because at the end of the day, we are more of an importing nation than an exporting nation. What that means is a lot of things, as you can see, made in China, made in Vietnam, made in Taiwan, made in so forth, right? We're more exporting things rather than sending things out. A lot of things were made in America, we send out. But again, as I said, we're doing more of the import rather than the export. So, so as I said, like, just pretty much set in stone. I said it's not going to be alive. It's not going to be. I make sure it's not. But again, I do 100% feel as if we are going towards stagflation, which stagflation, for those who are just joining, it's just an increase of, well, you just have high employment plus high inflation and you have a slow economic growth. It is not good. It is something that's not good as well. And as the dollar continuously loses value, as inflation does rise, that is something that we want to stay away from. So again, to just make sure you go around all of that, just prioritize your debts, make sure that's taken care of, prioritize your physical investments, right? Gold, silver, crypto, these things that's going to be a hedge against the dollar. You know, you guys do that, let time be a factor, and then from there you're pretty much set in stone. I guess I can take questions real quick if I see anything. But if not, I'm just going to jump off. I know it's a little delayed, so let me give it a quick second like it's last week. All right, thanks, Shar. See what we got. Drink some water too. All right, so that's pretty much it, guys. I just wanted to come in here, as I said again, break this down. For you guys who have not watched, it's going to be my YouTube. If you guys want this on a daily basis, as well as like, you know, you want trading signals, you want live trading breakdowns, live trading as well, you guys can join my Discord, the Profit Society, by clicking the link in my bio. As you guys see, it's pinned down there as well, handsomekelly.com. Go there, and I'll see you inside. All right, guys, appreciate it for everyone who stopped in. I'll see you till next time.